Welcome, everyone. I'm Ann Petrick, Senior Director of Research for Vistage Worldwide, and I'm happy to host the latest webinar in our Peak Performer webinar series. This series is designed to support your leadership climb by bringing the most trusted experts to the Vistage community. Experts who provide exceptional insight and best practices, helping you navigate new challenges and possibilities. Now, as we moved forward from the depths of the pandemic, some key themes emerged that inspired us for today's panel: impact, diversity, social justice, and sustainability. Increasingly, we're seeing large companies taking more vocal positions on these issues, and for many reasons. So today we'll be focusing on why environmental, social, and corporate governance, or ESG, is the next big thing for small and mid-sized businesses. And we'll discuss how, as a leader, you can create and execute an intentional ESG strategy that will drive growth for your company. We know there are many challenges small and mid-sized businesses are facing today, including talent scarcity, employee retention, increased regulatory requirements, rising costs, and supply chain issues. In many ways, strategies with an ESG framework can help with some of those challenges. Today, we'll learn more about how ESG may allow businesses to appeal to more employees, customers, as well as investors and acquirers. So I'm very excited today to welcome our panel, including Amantia Muadini, a sustainable investing strategist from the Chief Investment Office of UBS, and Mark Wilkins, a managing director and private wealth advisor for UBS. Amantia has worked with many of the public market leaders in sustainability, and Mark focuses his practice on business owners and has seen firsthand how ESG can impact a company, drive growth, and investor activity. So Amantia, let's start with the big picture. As it relates to ESG themes and sustainable investing overall, how have things evolved in the last year or so in public markets, and how might that work its way to small and mid-sized businesses?
Great, thanks, Anne, and great to join you, and great to be here with everyone this morning or afternoon, wherever you are. So it's a great question, and before I answer the question more directly, let me just go over a couple of terminology points here, just to level set and bring everyone on the same page. So you mentioned ESG themes. ESG stands for environmental, social, and governance factors, which I suspect that we'll talk a lot about over the course of the next few minutes in this conversation. And sustainable investing refers to the philosophy or practice of integrating sustainability consideration and these ESG themes or topics into the investment analysis and decision making. Sustainable investing aims to still generate market kind of competitive financial returns, but also is aiming to potentially contribute to social or environmental objectives that the investor may have. Now, to your question really more directly, what we've seen as an evolution over the last few years, and in particular really over the last 2 to 3 years, has been this increased interest in sustainability as it relates to investments and mainstreaming of ESG and SI broadly. 2020 in particular was really a watershed moment for our industry, as kind of in the middle of the market volatility and the downturn, and then kind of the market take up in the second half of 2020, what we observed was increased flows into ESG type public market funds on the equity and fixed income side, which really signifies this acceptance and realization that came together with this global health pandemic, that things were considered traditionally as non-financial, it's kind of health related, right, came very quickly and became financially material and impacted our economies and our markets. So this watershed moment has been reflected in increased interest that we've captured in surveys of investors as well. We know that 66% of private clients surveyed globally from our own UBS CSO teams are expressing that sustainability and sustainable investing is a highly important part of their investment strategies. On the institutional investor side, we know that over 64% of global institutional investors are aiming to make sustainability as part of their asset allocation, to manage part of their assets. And now this interest means that we have this mainstreaming and increased expectations of, of companies essentially having to respond to this investor demand and having to become more transparent as a very starting point on how their business relates to sustainability topics, and then potentially later on consider about how they can contribute to addressing some of these sustainability challenges. Now, all of this data and statistics that I'm quoting is related to public markets and cannot predict the future in terms of how this will further make its way into private markets and the middle market in particular. But one thing that we're seeing is really when it comes to private investors and let's say PE funds in particular, and increased their uptake in interest in ESG. There's more and more traditional kind of growth equity investor shops that are coming to market with either ESG or impact strategies. And so that means that there's already this increased uptake and expectation, partially driven by these institutional investors. That is forcing the middle market to start to respond and then look for companies that can sort of meet this demand. So that's one of the avenues that we'll see potentially continue to accelerate in the future.
Excellent. So I think, Mark, you bring a really unique perspective to the panel as a key advisor that helps founders and CEOs think about how intentional sustainability strategies can help grow value with the company's stakeholders, such as employees and investors and clients. With so many things for leaders to address, why should they focus on sustainability now?
Yeah, I think first of all, appreciate being here this morning or afternoon. I think that it is really just a time in corporate history when it's a confluence of so many events. But one thing I think is important to do, and again, I spend my time where the rubber meets the road with families and with families who own businesses. And I think this confluence of events really means we need to start with demystifying what ESG means. And there are a lot of ways that people think about it, but I like to start off by saying you can think about it particularly as a middle market business owner, as simply a framework for de-risking your business. Just the same that you'd want to have strong accounting standards and a process and a mechanism and a framework for thinking of your money flows. I think that thinking about ESG as a framework for de-risking your business is really important. And a very simple way to think about it that really doesn't mean you've got to move mountains. It doesn't mean you've got to change necessarily a whole bunch of things that you're doing. One of the things that we're doing that I'm really seeing is the interest of private equity firms in them being able to measure ESG for themselves. And why? Because ultimately they're going to want to sell their companies for the most part into the public markets. And again, the public markets are driving a lot of this. Private equity firms are spending a lot of time around this, which means that the companies that they want to buy ultimately are going to need to pay attention to the ESG framework. We can demystify it. It doesn't need to be more complex than it is. But I absolutely, just like accounting standards, I think that ESG standards, even as they're beginning to come together, are an important way for business owners to think about what they're doing.
Excellent. Almost having a scorecard, same as you would have a dashboard for your financials.
Absolutely. It also goes back to the concept of you manage what you measure. And so having some concept of what you're measuring, I think is really important for a business owner, just in increasing the value of their business or maintaining the value of their business, even if they're not thinking about a transaction or selling at any point in time.
Yeah. Before we go back to Amantia, are you seeing lenders, so beyond private equity, are you seeing financial institutions requiring this for funding?
I don't think we've really seen that in the middle market or lower middle market yet. Okay. Although I absolutely think it is coming. And I think that we're starting to see some things within public companies and lenders to public companies starting to take a look at that. Amantia, you might be able to address that. And I think that's a really important point.
Yeah, very important point. I mean, so I would agree that it is coming. One of the ways in which we know it's coming is, for example, over the last year, we've seen multiple coalitions across different places in financial services industry bring asset managers and asset owners, as well as banks on the financing side, to committing to this net zero concept. So to committing to lowering carbon CO2 emissions towards a total kind of zero by 2050. Now, 2050 feels like a long time to go still, but what we're seeing already is, for example, increased financial institutions commit to the Net Zero Banking Alliance, which over the next few years will require them to start looking at their loan books and have them try to assess what is the CO2 impact of their lending. And that means that, in a couple of years, they will start figuring out how to measure this, and then kind of putting down requests for firstly measurement, and then I suspect later on for ways to reduce CO2 emissions over time to their loan book, essentially. So I think this is coming there too.
Okay.
Before we move on, I'd like to actually go back and address the pandemic, actually, and the influence of the pandemic and all of this. One thing that we really experienced from the pandemic in working with clients is it brought families together, and particularly wealthy families and particularly business owner families, in a way that they hadn't been together physically in a long time. And one of the upshots of that is that younger generations made it clear to some of the older generations about the importance of ESG, maybe to them. I think of one very specific example of a family that owns a plastics company, and a younger generation saying that they actually don't want to be around owning a plastics company. I'm not saying there's anything good or bad or ugly about owning a plastics company, but I do think that story highlights the idea that the pandemic really caused families to spend a lot of time together. And I do think in that way is accelerating the pace of change around sort of all things ESG in a way that middle market business owners need to understand.
Yeah, I think that's an important point. A large part of our membership base is family-owned businesses. So very interesting concept to think about what the future owners of the business and what they bring to the table. Thank you for that point, Mark. So Amantia, with sustainability and impact becoming such important themes, how should small and mid-sized businesses be thinking about their approach to their stakeholders, like customers, suppliers, and employees? Do you handle those each separately?
Sure. It's another great question. I think this question starts to go towards what Mark was talking earlier about the need to demystify ESG, as well as the need to kind of bring this down to practical levels. How do you actually start thinking about the ESG framework that is relevant to your business? And I'd say when it comes to customers, suppliers, and employees, these are three stakeholder groups which can be helpful in two ways. One, they can be helpful in telling business owners how kind of what's important. So as a business, you'll need to set priorities eventually. What are the sustainability issues that matter, and which are the ones that you should track, measure, and then make a change on, right? To Mark's point. So checking with your customers and seeing what are the pressures that are coming onto them if you are a B2B kind of business. I think that's a really helpful way potentially to help you prioritize what are the sustainability issues that demands will be demanded of you, essentially. So that's one way to help identify. Employees, critical in on that same kind of objective or pillar of helping identify what are the issues that are most important, because your employees, firstly, are kind of the core often of many businesses. Secondly, understanding what's important to them may be an important retention tool, an important way to attract the right talent that you need. And then third, kind of broadening the conversations that you have as managers, and incorporating sustainability into the kind of the questions that are asked of employees to give feedback on, or the accountability that sort of they're being held to. Maybe another way to, one, identify, as I said, the issues that are important, but then two, ensure that there's implementation and follow through. And then finally, I think suppliers are very interesting because a slightly different stakeholder, right? In some ways, suppliers are the same stakeholder for companies as those that are B2B are, they're in someone else's supply chain. So your suppliers will be potentially, you'll be held accountable to an extent, depending on the kind of the business that you're in, for their performance around sustainability. It's a longer term thing. I think it's one of those things that is worth considering. What are the key issues that matter, and thinking, how do I have these conversations with my suppliers? Another way to think about this is sustainability is, again, about de-risking in some ways. So think, are there any sustainability risks that your suppliers are facing that you have not considered or captured? And would those then kind of ripple up to your business? And that's a kind of a way to have a conversation. Have we thought about the energy mix kind of across my supply chain, right? Have we thought about distribution and where materials are coming from? Have we thought about the cost of carbon and how in some regulated industries that may bring costs up over time? Am I pricing that into my inputs and modeling?
Great. Mark, do you have any comments on that too, the stakeholders?
Sure. As broad as ESG is, I think about it a lot from the pain point that so many businesses are going through right now, and it's attracting talent, and simply attracting talent. And all businesses are made up of people. I don't care what you do, your business is made up of people. It is going to succeed or fail or grow or shrink based on people. And I think about myself coming out of college a long time ago. And going to the Army as an Army officer, I wasn't asking a lot of questions. Fast forward to today, I have children in their 20s, and they ask a lot of questions I wouldn't have asked, questions I wouldn't have thought about. And the reality of it is, it doesn't matter what I think about it. They have their views on where they're going to go to work, where they're going to spend their time. And I don't think their views are particularly different from a lot of views of their generation. And so they have options in this generation. And actually, I think maybe even have some different wants. And so as a company, as I see it in my practice, as we're trying to attract talent, we are really having to think about the full scope of ESG, environmental, social, and governance. What are the models what are those models in your company? Because one of the things I think we're going through because of technology is just dramatically increased transparency. People are able to learn, and potential employers are able to learn so much more about your company, about what other employees think before going to work there than I ever dreamed of, particularly earlier in my career. And so I just think that in order to be able to track the most important part of any business, human capital, business owners, we're gonna have to get this straight.
Yeah, interesting. I mean, we know that from our own research that 65% of small and mid-sized businesses are having challenges operating at full capacity. And through the pandemic, we've seen that recalculation and recalibration of personal values and thinking about where do I want to work. So I think that the point that this is also can be a competitive advantage in hiring is a good one that you make.
And I think that's a really important point. Being the former Army tank officer that I am, defense is not my favorite thing. I want to be on the offense. And I do think that the smartest business owners are going to take ESG, think about that framework, not only for de-risking their business, but think about that framework. So how they can go on the attack and grow business, attract best of the best versus relative to peers that don't.
Yeah, excellent. So that was the internal audience of employees. But when we go back to, external audience of potential buyers or investors, what would some advice that you would offer to give those in our audience on how they should consider telling an ESG story to investors?
Yeah, so I think that the strongest exit plan is exactly the same as the strongest growth plan for your company. It's exactly the same plan, but you got to have that plan. And so I think that one of the first thing you can do is sort of immunize yourself against a lot of questions by being able to measure, track, and lay out for potential investors, how you're doing around metrics, good, bad, or ugly. The fact that you've gone through the process of thinking about it is going to be really important. Just the same way an investment banker would go through your company in a lot of different metrics. Investment bankers, because they understand what buyers, either private equity or strategics, are looking for. Investment bankers now are really starting to hone in on ESG metrics. And if you can have those at least started the process of thinking about it, and then move to the process of actually measuring, then you can go to the process of managing and be able to articulate what you're doing in terms of managing. It's only going to become more important.
Yeah, I'm curious. There's the idea of a P&L is that, we know what financial dashboards look like. Are there standard dashboards or metrics that should be measured?
No.
For ESG?
And
okay.
There really aren't. It's not like GAAP accounting, but I think it's like GAAP accounting before GAAP accounting. There was that period of time before GAAP accounting, and the way that we think about having audited financials today. People who wanted to increase the value of their business didn't wait for GAAP accounting to come around. They really focused on getting that data together, being conversant with that data, because I do believe that the metrics are going to change. They're going to evolve. I think things are only going to become more transparent. But again, as a business owner, I know business owners want to be leaning forward as opposed to being back on their heels and having to be reactive in most all things.
Yeah. And I mean, if I can just add something to this question, because it's an important one where it's also helpful again to look towards public markets for some lessons learned. I'd say there are two words in my mind that are important when it comes to how do you communicate this to investors, including to kind of the investment bankers that are helping do the diligence: authenticity and purpose. So I think authenticity, there may be a temptation in particular as you look up and you see everyone's talking about ESG to say, how can I look the best, knowing that these questions are coming. The market is becoming very quickly very smart in kind of detecting overstatements around sustainability. And I think being authentic about what you can do and what you cannot do, or what you haven't done yet, and sort of what's the plan to get there, I think that will very soon be more welcome than kind of looking to present the best possible version of how sustainable the business is. There's a lot of attention right now on these topics. That is a natural attention that is coming with the mainstreaming of ESG. Secondly, I said purpose. I think, again, it kind of goes back to part of the thread that we're having in this conversation, right? Like, this is core to your business. It's about de-risking. How do you decide what are the sustainability issues that matter to track? It's important also to think what are the ones that are important to highlight to potential investors and buyers. And starting with the sustainability initiatives that are tied to your core business, that have a purpose ultimately in the way that you'll grow and become profitable. Again, kind of to Mark's point there about the exit and growth strategy being one of the same, I think that will help think about how to communicate. So there may be lots of things that you are doing, that you intend to do, but narrow into the ones and show kind of how it then eventually comes back to your growth strategy.
I also think that point on authenticity is really important in terms of attracting employees. Employees and potential employers are both really smart, and there is so much more transparency, whether we like it or not, whether we want to be as transparent or not. And like many of the things that are sort of being the inappropriate approaches to ESG that are being sort of smelled out in the public markets, those inappropriate approaches are going to be spelled out in the private markets too, both by investors, but also by employees and potential employees.
Yeah, Mancha, can we dive deeper into different standards out there? Can you tell us about how businesses want to think about them and begin an approach?
Sure. So, I mean, as Mark mentioned, there's no standard kind of GAAP accounting that is global quite yet. But I'd say even in traditional accounting standards, it's still sort of the US and the international ones, right? So I wouldn't be kind of deterred or kind of discount this entirely just because we haven't reached the one thing yet for sustainability. That said, there are some standards where there's more behind which there's more momentum. One of which is the Sustainability Accounting Standards Board, SASB, which is, again, discusses and then is focused on public companies. But what SASB is providing is a mapping of sustainability issues for each sector based on financial relevance or financial materiality. And SASB is serving for a lot of investors as a point of kind of grounding in thinking, what are the questions I should be asking and how should I be embedding this into my financial models? So taking a look at that as even as just kind of broad guidance to see kind of where the puck is going potentially, and see where relevant, how you can map yourself and kind of your business within your sector and industry. That could be one helpful thing to kind of take a look at. Another one that is getting a lot of momentum, specifically around climate and environmental issues, is the standards issued by the Task Force for Climate Disclosure, TCFD, Financial Climate Disclosure. There are many acronyms in this space. So the TCFD is a organization that was came out of the Financial Stability Board, and its objective has been to provide guidance, in particular to companies in resource intensive industries, to think about what are the sustainability and environmental metrics that need to be measured, and how to move towards reducing climate risk, and how to think about reporting against these. There's a lot of backing behind TCFD. It has been sort of one of the acronyms that is most utilized recently in the global United Nations conference around climate that is happening this week, as well as a lot of governments around the world are starting to design regulation that is aligned to the TCFD. So again, that's another kind of thing to take a look at and think for guidance at the very minimum. And then the other thing that I'd say in addition to this is I'm kind of bringing it back to, as you're thinking about standards and frameworks and what to measure and what to track, come back to kind of measuring what matters. So there may be, again, sustainability issues that you really care about because they're part of your family's value structure. Those are important to keep moving towards, but measure and track what matters to the commercial success of your business as a starting point.
Yeah, I love, oh, go ahead, Mark.
I was going to say, just to add on to that, I think that it's really important as we think about businesses, on one hand, we can talk about multinational corporations. On the other hand, we can talk about a million, 2 million, 5 or 10 million EBITDA sort of business. And, if we would have had this exact same conversation 2 years ago, I would have said that maybe you should think about hiring a pretty expensive consultant if it's important to you and you think it's going to add value to your business, to come in and put some framework in and begin to do some measurement. And through technology, like everything else, what we've seen are the prices of that with a strong technology layer come way down. And there are, technology software companies out there now that are able to pretty easily layer on and pretty inexpensively layer on top of what you're already doing just to start to measure. And so again, going back to, we're not talking, this audience is definitely certainly not the, thank goodness, not the multinational corporations that are out there, but still want to potentially take action in a very actionable, bite-sized way around getting their arms around data measurement. It doesn't have to be super hairy. It doesn't have to be super expensive. There are companies out there, technology companies out there now that are helping small and middle market business owners do this.
Yeah, I like what both of you are saying about, bite size or the prioritizing the things that are important, because I think small and mid-sized businesses might actually be able to be more nimble to be able to determine those priorities and incorporate them in their reporting than a larger company for sure. And I also like how you're talking about integrating it into the things that you're already doing. So it's not it's not one more thing to measure, but you're connecting it back to values, you're connecting it back to how your business functions. So a question for both of you then. It's easy to focus on environmental and sustainable aspects around ESG, but also diversity has become a major theme over the last few years. And in fact, in recent months, we've seen a struggle to find and retain talent, but we've seen diversity and certainly inclusion have become much more important to many employees and rising priorities to business owners as they struggle to really think about what diversity and inclusion means to them. So how are you seeing in your work businesses become more intentional in their diversity and inclusion efforts?
I'm going to let you start with this one.
Okay. Right,
Sure. Happy to. I mean, I think we've definitely. Firstly, we've seen this topic become increasingly important. Again, I fall back to kind of my day job and area of focus, which is public markets. I was looking at some data of how of the frequency in which terms related to diversity, be it gender or racial or ethnic, were discussed in the quarterly shareholder calls in over the last few years. And it went from, like 20 or 50 times, like 5 or 10 years ago, to kind of 400 times in 2020, which makes sense as there was so much focus across the US on this topic. And I think that increased social movement is now staying at that high level, and which means that companies are having to take a hard look at themselves as businesses and see if they are where they need to be in terms of diversity and inclusion. Two separate terms, right? Diversity is about who do you have in the room and how you're who you're hoping you're opening the door to. What door are you opening even? Where are you looking for the talent? And then inclusion is, let's say that you have the right team in place. Do you have the kind of the tools, the policies, the processes in place to make sure, one, that they want to stay, retention, and then secondly, that they're actually able to contribute fully in the workplace. So we're seeing increased intentionality. What this is looking like is as the starting point, people asking more questions and looking for tools and resources, and kind of reaching out for training and education, which is really in some ways like step number one is to diagnose if there's a problem, if there's not enough of one or the other, kind of either diversity in your team or the policies aren't kind of accommodative to allow for people who need more flexible working arrangements, for example, or come from a different background. Then the first step is education, and we're seeing more people do that, and that's almost like one of the tips of advice that we would give to business owners as they're thinking about making their businesses more intentionally diverse and inclusive. Another thing that is important for people to think about is what are their management processes like? So let's say we're moving through this education phase, looking for external and internal learning opportunities, then taking a good look at our team working arrangements structured in a way that they welcome challenge. For example, one of the benefits of diversity outside of equity reasons is that more diverse teams are more likely to reduce the risk of groupthink, of kind of everyone falling into the same fallacy, right? Having an organizational culture that actually supports challenge is important to enable that benefit to come to the business. So we're seeing people also kind of take a look at their management structures and policies in this way.
For me, I think about this topic, and could we even find a more difficult topic than this one? For me, being half black and half white, having been around this topic basically every day of my life, I'm pretty comfortable with it. And as business owners, I really think you've got to start with why even think about it. And really just start from there about you, not anybody else, not the rest of the world, just in your business. Why would you think about diversity, equity, and inclusion, and why may or may not, frankly, be important to running your company? And so when you start to think about it from that lens, from a governance standpoint, the G in ESG, as Amatya really kind of started to talk about, is it helpful to have different views and different opinions that come from different experiences? Forget what the Zoom looks like. Is it important to have that sort of diversity? I have a friend who recently sold his company, a very, very close friend, and he talks about if you have a customer base that is made up primarily of people who do not have college educations, is it may be important to think about having somebody in your senior leadership that doesn't have that experience of having gone to college, and think about that from a diversity standpoint. So it can mean a lot of things it can mean very different things to different companies. And I actually think that it should. But that's, one reason is just to attach yourself and have a better understanding of your customers, whether they be businesses or whether they be consumers. Yeah, I'll leave it at that. But I do think it's an important topic that's got to start individually with each company about thinking about why it is important, or frankly, why it may not be important to think about DEI as it relates to your business.
Yeah, when you think about it, I think a lot of, depending on where you are in the spectrum of embracing that, initially it starts as a talent initiative, right? Getting the right people, retention, development, but you're talking about it both at more of a strategic level. What's it going to do actually for the business and the success of the business? So I think that's the shift that I think that many businesses need to be thinking about.
I will say that in the last couple of years, I've become the phone a friend for, everything from public company CEOs and board members to my clients who have middle market businesses around this topic. And, again, I can't emphasize enough starting out thinking about the why. Why is it important to you? Why is it not important to your business potentially? And go from there.
Yeah. Well, I like the idea about moving away from groupthink and having diverse thoughts and opinions and experiences around the table to really help go beyond where you are today. So our last question, before we go to some questions from our participants, please feel free to drop those in the Q&A pane. Looking down the road, how might ESG continue to evolve for both investors and for companies? And what might business owners be watching for to help them drive their strategy? So first, Mark, we'll go to you.
Sure. I think the first thing you got to really think about are what are investors, potential acquirers thinking? What are the questions they're asking? Maybe not in buying your company, but buying your competitors. And so I think that market intelligence around that and just keeping an ear to the ground of the questions that acquirers are asking is going to be really, really important. I think that a lot of those questions are going to be driven by what happens in the public markets. But I think that keeping an ear to the ground, whether you're interested in the value of your company, understanding the value of your company or not in any particular moment, this is going to be a driver of the value of your company going forward.
Thank you. Okay, Mantia.
It's always harder to go second. I mean, I would say I would agree with everything that Mark said, and just really looking at public markets, because this is how we frame this conversation, right? ESG in its current formalized form is emerging and developing very rapidly in the public markets, and then it's making its way downstream. So looking at what's kind of where ESG is going in public markets will remain important. Looking at what regulators are starting to also ask of investors will become important, because that then helps you give a sense of then what are these questions that they're likely to have to ask, not want to ask, but have to ask. There's currently, so the SEC, for example, this year, one of its exam priorities for the financial services industry, investment advisors and asset managers, is to look at ESG. And they're looking at it from a risk perspective. They want to know that these advisors that are saying, we're doing ESG investment opportunities, that they actually are doing it. And what this means is everyone will have to get that much more kind of, tighter and in good shape in the questions that they are asking in their due diligence, and in how they are kind of recording all of the assessments that they're doing, the data that they're looking at, and so forth. So looking at this kind of, what is the SEC demanding of investment advisors and asset managers? It's looking likely that they will require even more transparency moving forward. And by the way, it's looking likely they've signaled that they may propose a rule to demand publicly listed companies to disclose on their climate and ESG risks kind of formally. And that's coming supposedly kind of end of this year, early next year. And so this is moving very quickly. Taking a look at how that trend is evolving should be, again, a good signal to what to look towards.
And
one thing.
Quickly, I'm sorry. Keep going.
I was going to say just one more thing, which is as I look at broadly the kind of how the market is evolving, I think we'll see two trends. One is that basic ESG questions from a risk perspective will increasingly just become table stakes. Mm-hmm. People will have to and will learn to ask these questions because of this increased understanding of how they help bring a different lens into understanding the risks or opportunities that a business is exposed to. Another thing that we'll see is increased differentiation between this basic, I'll call it that, ESG due diligence, and those investors that are looking for companies that are actually driving positive change in the industries where they're operating. This will be important to understand because every business will have to look, at kind of their core work and decide what box they want to fit in, knowing that they don't have to fit in every box. So doing kind of your homework and kind of being covered on environmental, social, and governance topics does not mean that you have to contort your business to be a clean tech business, because that's kind of what we care about now in decarbonization. That's a different thing, and the market will start to kind of look to differentiate, which will, I think, make it easier, frankly, for everyone as we have more clarity there.
Okay, thank you, Amatya. So we talked about some of the distractions that small mid-sized businesses are facing, talent, both hiring and retention, and also some of the supply chain challenges. Do you feel like sustainability and ESG could be a bit of distraction then in face of these challenges?
Well, I think that
go ahead, Mark.
I think that middle market business owners live with distractions every day. And in fact, most things besides dealing with getting product out the door or advice out the door, whatever it is that your company does, is a distraction. But I don't think of it as a distraction to not pay attention to. To actually put a finer point on, or go back and address implicit in a question you asked about lending. That's another data point I really think that middle market business owners should pay attention to. And I kind of think about it as, I don't think this is a change that's going to take place next month or next quarter or even next year. But I don't think 10 years from now, lenders are not going to be asking these questions. And I sort of think about it sort of the evolution of the iPhone. It's hard now to remember life before the iPhone, but it's not actually been that long ago that we didn't have iPhones. Mm-hmm. And so it's coming. Just don't, my biggest advice is don't let it sneak up on you. Don't think of it as a distraction. Think of it as something to get your head around sooner rather than later.
And I'd only add, this is why starting with the purpose and starting with what matters to your business versus sort of what everyone else is talking about is important. That's the way to not be distracted, to kind of not just have sort of, don't think of it as a pet project on the side, essentially. Identify the ESG topics that are important actually to help you grow.
Yeah, exactly. And I think, with the supply chain challenges that we're seeing and many people reevaluating their supply chains, I actually think that's a great way to weave ESG in if you're evaluating, what are some of how can you reevaluate in a way that incorporates some of those new standards? All right, a couple questions about impact and, what kind of impact will this movement have on political leaders? How are you seeing this from the business side start to push up into policy? Mark, you want to take that one first?
Sure, I'll take the political question. Look, I think that politics around ESG investing, I think is we need to all do the best we can to block it out. Whether it comes from the left or whether it comes from the right, it is about, I think it is about looking at your business and looking at the world of big problems out there. And you don't have to be a company that solves those problems. And do not, and as we mentioned before, don't contort yourself into thinking that you need to be a company that's going to solve all the world's problems. But I do think that the focus is on not adding to those problems is probably a good place to start. And I think politics, if we're going to look for a distractor in all of this, I do think it's going to be politics, maybe coming from both the left and the right, that is going to be a distractor. What we're really talking about is how can you run your business more effectively, more profitably for the long term, not next week or next quarter, but how can you do those things more profitably for the long term? And I actually think it's incumbent upon all of us in many ways to attempt to block the politics out of this, and do what's right for your business. But that includes all of your stakeholders, your shareholders, your employees, and your customers.
And I mean, I'd only add that if we think of regulatory action or fiscal support, that's tied to politics. And so that may be that, but that is part of the investment case often when we look at sustainability. What are kind of fiscal support trends coming and what are the opportunities created there? That is one part of the investment trend. Then there's all of these other things like shifting demographics. We know the younger generations just are more interested in sustainability. They're voting with their wallets. They're asking questions of the companies that they're purchasing from. This is a generational shift. It is not kind of a whoever is sitting in the office at any level of our government actually type of shift. If we look at global sustainability challenges, if we look at global trends like the aging population, for example, increased urbanization, just growing global population, all of these are secular trends that are here to stay for the next few decades. So again, independent entirely of who sits in any office anywhere, they are creating demands on all of us societally to think about how do we innovate on a lot of these challenges that are tied to sustainability. And so again, I think that's the way that I would disentangle from the now and the noise and look at the bigger picture when it comes to this.
Excellent, thank you. And you talked about all the different stakeholders, but what do you think ESG development might have on international trade? Are there distinct impacts that are domestic versus international, or is this all encompassing? Mark, do you want to take that one first?
Sure. I think that, and Amante is going to be way more the subject matter expert than I am. In fact, I'm going to let her take this question because I think that's much more her focus.
Okay.
Sure. I think so. I don't think the answer is that it depends, and we'll have to wait and see. So there are some areas in which ESG or sustainability topics will become part of kind of international trade or international financing type conversations. One example is there's a conversation currently around the kind of how to have an energy transition that is also sustainable from an economic perspective. So it's still equitable. It still allows us to have as much energy as we need to consume globally, but also it's so economically sustainable, but also environmentally sustainable, right? Part of the way that global leaders are addressing this is thinking about when do you start phasing out investment into greenfield type of fossil fuels. And we just saw a commitment, I think a couple of days ago, come from a few global governments, including the US, that they would not finance international greenfield, unabated new coal investments. Very narrow kind of commitment, but an interesting one to kind of see how that will evolve. I think China has made a similar commitment, not about its own domestic investments, but about what it'll be willing to finance in terms of coal internationally outside of its borders. So that's part of this answer. I think a second part is we've been talking a lot about kind of the US, but when it comes to ESG, Europe really, as a whole continent, has really been leading on sustainability, both in terms of what investors are kind of interested in, where assets are going, and what kind of regulators are supporting across the political spectrum, as we just talked about this. Interestingly, there was an election right now recently in Germany where one of the key sort of underlying things that everyone agreed on was that there would be more investment on the clean energy transition. that was kind of one of the kind of underlying things that we could reliably expect, regardless of what the final coalition outcome was. And so as the EU is setting standards on this, I think that is then through diplomacy, kind of reaching out into other countries, and then we're seeing kind of an impact as well in other markets. So that's another thing that we'll have to keep track of as well.
I also think that we're waking up. Really, all of us are having to wake up to how closely linked all of the world is, and I think we've seen that within the pandemic. And then if you think about how closely linked supply chains are, and one of the things, and I think there's, because of increased transparency driven by technology, I think there is a lot more risk that's going to get pushed much more further down in understanding, even as a smaller middle market business owner, your supply chain. And I think there's going to be a lot more opportunity to either be embarrassed or worse than embarrassed by not understanding your supply chain. I think about things like child labor that let's not, before we get off into a bunch of different areas of ESG, that, child labor is something that I think in a lot of supply chains, there's only going to be a lot more transparency, and you as a business owner, understanding what your exposures are. That's what, to me, that's what, this ESG framework that you should be thinking about, to the de-risk of your company, to the de-risk of your reputation. I think that's going to be more important because of transparency.
Thank you. All right, last two questions, somewhat related. You mentioned that there are consultants who offer guidance to companies, and specifically those who are actually in a sustainability bent industry. So I'm wondering if that's something that offline we can provide any consultants, any recommendations for our members. And then that bleeds into, when companies start to focus on their sustainability and start to improve that, how can they effectively convey that authenticity and purpose that you mentioned and avoid appearing to be greenwashing? So be gratuitous in talking about some of the things. So Amantia, you talked about authenticity and purpose, so we'll send that to you first.
Sure. So, I think we started touching on this question a little bit earlier. I'd say one of the ways to avoid appearing that you're greenwashing is to be honest about what matters to your business that is sustainability, that you've identified, but what you cannot yet make progress on. Showing what you cannot do is, I think that's the easiest way to be honest, because when you're pairing that up with what you can do, then you're providing a holistic picture. And I think even in kind of traditional due diligence, one of that what you cannot do, what you have not thought yet about, is the type of thing that investors will try to tease out. And so being kind of forthcoming with it may help your credibility further.
Okay, so focus on what you can and can't do at the same time. Excellent. Mark?
Yeah, the word I would add to authenticity was just simply the vulnerability. And I think in almost all human interactions, to include everything around this, vulnerability is important. Be open to understanding your warts at first, and then sharing them and being open about that. And I think if you are, in your heart, authentic and vulnerable about what you're trying to do, that will come through again to all stakeholders. And on the topic of resources, I think that yes, we've got lots and lots of resources. I think it's better done offline and frankly in a more individual way. So I'm happy to share any knowledge, any connectivity that I have once I understand what somebody's specifically looking for, but more than happy to do that. And I think there's some really, really interesting cutting edge stuff we're seeing for middle market business owners going on.
Yeah, very exciting. And speaking of resources, I wanted to share that there is a fantastic report put out by UBS called For the Long Run that is linked on our website and will be sent to all of our attendees in the post-event communication today, and really digs deep, has a couple of articles from Amantia, and really gives some practical frameworks and some good statistics around ESG. So just wanted to mention that, and thank both of you, Mark and Amantia, as part of our Peak Performer Series. Thank you so much for being here today.
Thank you.
It's a pleasure.
So we will be sending a link to today's recording and the link to that report within 24 hours. And that is very important. That link is being shared in the chat as well. If you want to note that right now, or it will be sent in that follow-up email or available on the post-webinar blog on vistage.com in the Research Center. Meanwhile, I hope you can join us for one of our upcoming webinars, including on November 12th, we have Joel Martinez from the Latino Leadership Institute, who will share insights on how to uncover bias, looking at our brain functions, thinking tendencies, and biases in everyday life. So understanding bias is a first step to really a robust DE&I strategy. So understanding our personal biases. So that's November 12th. And on November 19th, as part of our partnership with Stanford, Dr. Jennifer Aker will draw on new research to suggest ways to reframe happiness and discuss how we might design brands, organizations, careers, and lives that cultivate meaning and are fueled by humor. So that sounds like a great session from our partners at Stanford. You can register for those sessions at vistage.com/webinar. That's vistage.com/webinar. Thank you everyone for attending today. Be safe and be well.